According to the Wall Street Journal, the recession trade is back on Wall Street. Investors actually entered 2025 very optimistic that the US will have a continuance of its strong economy due to a market-friendly administration, pushing items like friendly tax cuts and regulatory rollbacks. But instead, we have trade tensions and multiple signs of a slowing economy. Both the S&P 500 and the Nasdaq are down over 5% in this recent pullback. But the real concern here is that this could just be the tip of the iceberg of a much larger pullback, if not full-blown recession. And as of right now, there's a couple of main reasons behind this. So one of the big ones is the decision of the Trump administration to impose these tariffs on America's closest trading partners, 25% on Canada, Mexico, and a total of 20% now on China. And tariffs have a big impact on multiple aspects of the economy, but one of the bigger concerns right now around tariffs is the impact to inflation. This is something the US economy has been combating for 3 years now. It's proven very difficult to fully eradicate, currently sitting at around 2.6%, and some believe that these tariffs could add half a percentage point to these numbers. So back in September, this red line here was the expectation for future inflation, and this blue line is the updated projection. We also have some indications that the economy as a whole is beginning to slow down and soften. The latest data point we just got today, March 6th, is that employers announced 172,000 layoffs for the month of February, up 245% from January. And it's also the highest monthly count since July of 2020. Now, an important detail here is that 1/3 of the total came from the government cutting positions, as the new Department of Government Efficiency cut 62,000 jobs. So that's certainly adding to this number, but it doesn't account for the entirety of the figure. And even so, these are real jobs and they have an impact. And another core piece of data on the economy is the recent downturn in US personal consumption expenditure. Adjusted for inflation, personal consumption was down 0.5%. And visually on the graph, this is what that change looks like. Now keep in mind, this is very important because the US economy is a consumption-led economy. We do have other factors such as investment, also government spending, which that in and of itself is experiencing a big reduction, but consumer spending is the single biggest slice of the pie, and that's why this is extra concerning. And altogether, when you combine a potential slowdown in the economy with persistent high inflation, that culminates in a economic situation called stagflation, which is very not good. But to end the video on a more positive, upbeat note, there are some bright spots here. The first one is a lot of this is self-inflicted, meaning that it could easily be reversed simply as a result of policy change. So if Trump does get his way and ultimately the tariffs are removed, that's going to undo a lot of this negativity. Also, with the reduction in government spending around Doge, this is not going to be a permanent thing. So while it's causing a lot of short-term unease, a reduction in government spending, it's not going to last forever, and long-term, it may help to reduce the deficit, which is a good thing for the US economy. And then the other point to remember is that increasingly, the US economy is propped up by wealthy individuals. Just a few days ago, the Wall Street Journal reported that the highest earning 10% of Americans now account for about half of total spending within the economy. Now, this has a lot of social implications. I'm not diving into that aspect of this. I'm simply focusing on the economics of this because this group of people continue to do very well, which helps to form a base of resilience within the US economy. And just to further prove this point, CNBC just today posted this article indicating that the population of multimillionaires in the United States, which is people with a net worth of $10 million plus, jumped 5.2%. And having a lot of rich people in a consumption-led economy that really aren't affected by tariffs, inflation, layoffs, does make the economy more resilient.